Hello, everyone. Thank you for joining me today. I'm excited to dive into a topic that's been generating a lot of buzz, the cryptocurrency landscape heading into 2026. Before we get started, I want to make something crystal clear right up front. What I'm sharing here is purely for educational and informational purposes. This is not financial advice, investment recommendations, or any kind of solicitation to buy, sell, or hold any assets. Cryptocurrencies are highly volatile, and investing in them involves significant risks, including the potential loss of your entire investment. Always do your own research, consult with qualified financial advisors, and consider your own financial situation before making any decisions. Market conditions can change rapidly, and past performance is no guarantee of future results. With that said, let's explore some insights based on recent analyses and predictions from various industry sources. As we look ahead to 2026, the crypto market is poised for what many experts describe as a period of maturation and growth. We've seen incredible developments in 2025, from increased institutional adoption to advancements in blockchain technology. According to reports from firms like Forbes and Galaxy Research, the focus is shifting toward real-world applications, tokenized assets, and integration with traditional finance. Bitcoin, for instance, continues to dominate as a store of value, with predictions suggesting it could reach new highs driven by ETF inflows and regulatory clarity. Ethereum remains a powerhouse for decentralized finance and smart contracts, while newer players like Solana are gaining traction for their speed and scalability in areas like gaming and DeFi. One major trend expected to shape 2026 is the rise of tokenized real-world assets, or RWAs. This means things like real estate, bonds, and commodities being represented on the blockchain, making them more accessible and liquid. Analysts from Bernstein and Standard Chartered project that this could drive Bitcoin to prices around $200,000 or higher by early 2026, fueled by institutional demand and ETF expansions. Similarly, the integration of AI with blockchain is another hot area, with projects focusing on decentralized machine learning and data processing potentially seeing significant uptake. Regulatory progress is also key. In the US and globally, clearer rules around stablecoins and crypto classifications could encourage more mainstream participation. For example, bills like the Clarity Act are paving the way for better defined legal frameworks, which might boost confidence among investors. However, challenges remain, such as market volatility, security risks from hacks, and environmental concerns related to energy-intensive mining. Now, let's discuss some cryptocurrencies that analysts and market watchers have highlighted as potentially noteworthy for 2026. Again, this is based on aggregated predictions from sources like Money.com, YouHodler, and Forbes, and it's not an endorsement. I'll cover their key features, potential strengths, and risks to give a balanced view. Starting with Bitcoin, often called digital gold. BTC has been the cornerstone of the crypto world since 2009. In 2026, experts predict it could benefit from continued halving cycles, which reduce supply, and growing adoption by corporations and governments. For instance, forecasts from Galaxy Research suggest BTC might hit $250,000 by 2027, with 2026 being a volatile but upward year. Its strengths include widespread recognition, liquidity, and use as a hedge against inflation. However, risks involve regulatory crackdowns, competition from other assets, and price swings tied to macroeconomic factors like interest rates. Next, Ethereum, or ETH. As the second largest crypto, Ethereum powers a vast ecosystem of decentralized apps, NFTs, and DeFi protocols. Upgrades like sharding and Layer 2 solutions are expected to improve scalability, potentially pushing ETH prices to $8,000–$15,000 in 2026, according to some forecasts. Strengths here include its developer community and versatility for smart contracts. Risks: high gas fees during peak times, competition from faster chains, and the ongoing shift to proof of stake, which could introduce new vulnerabilities. Solana, Sol, is another one frequently mentioned. Known for its high transaction speeds and low costs, Solana has exploded in popularity for gaming, meme coins, and retail trading. Predictions point to it maintaining a top position, with ETF demand potentially absorbing more than its new supply. Analysts from Cryptopolitan and BitGet see it as a leader in on-chain volume and AI integrations. Strengths: fast execution and a growing ecosystem. Risks: past network outages, centralization concerns, and dependency on hype-driven sectors like memes. Ripple's XRP is often discussed for its focus on cross-border payments. With ongoing legal resolutions and partnerships with banks, XRP could see renewed interest in 2026. Sources like Money.com list it as a top pick for its utility and remittances. Strengths: speedy transactions and real-world use cases. Risks: regulatory uncertainties, especially in the US, and competition from stablecoins. Chainlink, Link, provides Oracle services that connect blockchains to real-world data, essential for DeFi and smart contracts. Predictions suggest it could benefit from the RWA boom, with integrations expanding. Strengths: critical infrastructure role and partnerships. Risks: dependency on broader DeFi adoption and potential Oracle failures. Avalanche, AVAX, stands out for its subnet architecture, enabling custom blockchains. It's gaining in gaming and institutional finance, with forecasts highlighting its scalability. Strengths: high throughput and eco-friendly consensus. Risks: competition from other layer 1s and token unlock schedules. Algorand, Algo, emphasizes sustainability and speed, appealing to enterprises. It's positioned for growth in tokenized assets. Strengths: pure proof of stake and academic backing. Risks: slower adoption compared to hype-driven coins. BNB from Binance is tied to the world's largest exchange, offering utility in trading fees and ecosystem perks. Strengths: strong backing and cross-chain features. Risks: regulatory scrutiny on Binance and centralization. Dogecoin, Doge, the original meme coin, could see volatility but potential upside from community and endorsements. Strengths: brand recognition and fun factor. Risks: lack of utility and susceptibility to pump and dump schemes. Lastly, emerging ones like Arbitrum, ARB, for Ethereum scaling, or Render, RNDR, for AI rendering, are noted for niche growth. Strengths: specialized tech. Risks: high competition and early-stage volatility. Beyond individual coins, consider broader strategies. Diversification across asset types, blue chips like BTC ETH, mid-caps like SOL XRP, and perhaps small allocations to high-risk plays, can help manage risk. Tools like on-chain analytics and wallets with built-in security are crucial. Also, watch for innovations in DeFi, where yields from lending or staking might attract more users, but always beware of impermanent loss and smart contract bugs. In terms of market predictions, Bitwise forecasts crypto equities outperforming tech stocks, and A16Z Crypto highlights advancements in zero-knowledge proofs for verifiable computing. This could enable new applications, from privacy-focused apps to efficient cloud services on blockchain. Community sentiment from platforms like X, formerly Twitter, echoes these, with users bullish on BTC, ETH, SOL, and XRP for 2026, often citing real adoption and surviving cycles. However, remember social media can be echo chambers. Verify with multiple sources. To wrap up, 2026 could be transformative for crypto, with trends like RWAs, AI integration, and regulatory clarity driving progress. But volatility is inherent. For every success story, there are pitfalls. Educate yourself continuously. Use reputable exchanges. Enable two-factor authentication. And never invest more than you can afford to lose. If you're new, start small and learn the basics of wallets, keys, and taxes. Thank you for your time. I'd love to hear your thoughts in the comments. What trends are you watching for 2026? Stay informed, stay safe, and here's to a prosperous year ahead. Expanding? After intro, spend more time on market overview. Discuss 2025 recap, bull run, ETF approvals, macro factors, inflation, Fed policies, global adoption, countries like El Salvador. For each crypto, expand, history, technical details, recent news, price predictions from multiple sources, use cases, competitors, community size. Add sections on risks in crypto investing, hacks, scams, market manipulation, how to evaluate a crypto, white paper, team, tokenomics, future narratives, Web3, metaverse, CBDCs, portfolio strategies, tax implications, sustainable investing in crypto. Include anecdotes or hypothetical scenarios, e.g., imagine a world where your real estate is tokenized on Avalanche. Aim for 4,000 plus words. Final script. Hello, folks. Thanks for being here. Today, I want to talk about the cryptocurrency market as we head into 2026. First things first. This is all for educational purposes only. I'm not a financial advisor, and nothing I say should be taken as advice to buy, sell, or hold any cryptocurrency. The crypto space is extremely volatile, and you could lose all your money. Always do your own thorough research, talk to professionals, and only invest what you can afford to lose. Markets change fast, and what's true today might not be tomorrow. Okay, with that out of the way, let's get into it. Looking at the big picture for 2026, the crypto market is building on the momentum from 2025. Last year saw massive institutional inflows, with Bitcoin ETFs alone pulling in billions. According to Forbes, 2026 will be the year of tokenized real-world assets, things like stocks, bonds, and even art being put on the blockchain for easier trading and ownership. This could bring trillions into the space as traditional finance meets crypto. We're also seeing AI and blockchain merging, with decentralized computing becoming a thing. Think about it. Instead of relying on big tech companies for AI, blockchains like those focused on machine learning could distribute the power. Regulatory clarity is another huge factor. In the US, bills like the Clarity Act and stablecoin regulations are expected to provide a safer environment for investors. Globally, countries are adopting crypto at different paces, some embracing it for payments, others for central bank digital currencies. But with opportunity comes risk. Geopolitical tensions, energy costs for mining, and potential bans in certain regions could shake things up. Now, let's break down some cryptocurrencies that analysts from sources like Money.com, uHodler, and Galaxy Research have pointed to as potentially interesting for 2026. I'll cover their backgrounds, what makes them stand out, potential upsides, and the downsides. Remember, these are based on public predictions and data, not guarantees. First up, Bitcoin, BTC. Created in 2009 by Satoshi Nakamoto, Bitcoin is the original cryptocurrency, designed as a peer-to-peer electronic cash system. It's decentralized, with a fixed supply of 21 million coins, and uses proof of work for security. In 2026, experts like those at Bernstein see BTC hitting $200,000 or more, driven by ETF demand and its role as a store of value. Strengths include its network effect. It's the most recognized crypto used by companies like MicroStrategy for treasury reserves. It's also seen as an inflation hedge, similar to gold. Community discussions on platforms like X highlight its resilience through cycles. On the flip side, risks include high energy consumption, slow transaction speeds, about 7 per second, and vulnerability to quantum computing in the long term. Price can swing wildly based on news, like regulatory announcements or halvings. The next one isn't until 2028, but the effects linger. Moving to Ethereum, ETH. Launched in 2015 by Vitalik Buterin, Ethereum introduced smart contracts, enabling programmable money. It transitioned to proof of stake in 2022, reducing energy use by 99%. For 2026, forecasts from MargX suggest ETH could reach $8,000 to $15,000, thanks to upgrades like sharding for better scalability. It's the backbone of DeFi, with over $100 billion in locked value and NFTs. Strengths: vast developer ecosystem, Layer 2 solutions like Optimism reducing fees, and institutional interest via ETFs. However, risks involve competition from faster chains, occasional network congestion, and governance debates. If DeFi grows as predicted to $231 billion by 2030, ETH could benefit hugely, but scams in the space are rampant. Solana, SOL, is a newer entrant, launched in 2020. It uses proof of history for blazing fast speeds, up to 65,000 transactions per second. Analysts from Cryptopolitan and Bitget see it as a top pick for 2026, especially in gaming and retail apps, with potential for 10x growth in adoption. Strengths: low fees, fractions of a cent, thriving memecoin scene, and integrations with AI agents. X users often list it in their 2026 watchlists for its execution layer role. Risks: history of outages, though less frequent now, more centralized validator set, and heavy reliance on venture funding unlocks, which could pressure price. XRP from Ripple, created in 2012, focuses on fast, cheap cross-border payments. It's used by banks via RippleNet. Predictions from Money.com included in top lists for 2026, with potential from resolved SEC lawsuits. Strengths: 3 to 5 second settlements, partnerships with financial institutions, and utility and remittances, a $800 billion market. Community sentiment on X places it high for real-world use. Risks: ongoing regulatory battles, pre-mined supply, seen as centralized, and competition from Swift's blockchain trials or stablecoins like USDT. Chainlink, Link, is an Oracle network, launched in 2017, that feeds real-world data to blockchains. Essential for DeFi, as contracts need external info like prices. For 2026, it's highlighted for RWA tokenization, with Galaxy noting its role in 250k BTC scenarios. Strengths: decentralized oracles reduce single-point failures, integrations with hundreds of chains, and CCIP for cross-chain transfers. Risks: dependency on node operators, potential data manipulation attacks, and slower growth if DeFi stalls. Avalanche, AVAX, started in 2020, uses subnets for custom blockchains. It's eco-friendly with proof of stake. Analysts see it in top 8 for 2026 due to institutional DeFi and gaming. Strengths: sub-second finality, scalable for enterprises, and partnerships like with Amazon Web Services. Risks: token inflation from emissions, competition in Layer 1 space, and past exploits in bridges. Algorand, Algo, founded in 2019 by MIT professor Silvio Micali, prioritizes speed and sustainability. Pure proof of stake with no forks. Predictions included for enterprise adoption in 2026. Strengths: carbon negative, atomic swaps, and focus on real assets. Risks: lower hype than memecoins, marketing challenges, and unlock schedules diluting supply. BNB, from Binance in 2017, powers the Binance Smart Chain. Low fees for dApps. uHodler lists it for 2026 growth in cross-chain. Strengths: tied to the biggest exchange, burning mechanism reducing supply, utility in trading. Risks: regulatory pressure on Binance, centralization, and hacks on associated bridges. Dogecoin, DOG, born as a joke in 2013, has community backing from figures like Elon Musk. Fool.com predicts it could surpass some alts by 2026. Strengths: viral appeal, tipping culture, potential payments integration. Risks: limited development, pump and dump nature, no cap on supply. For emerging ones, Arbitrum, ARB, scales Ethereum with optimistic rollups. High TVL, seen as solid for 2026 DeFi. Strengths: Ethereum security, low costs. Risks: rollup wars, governance tokens. Render, RNDR, for decentralized GPU rendering in AI metaverse. A16Z, excited for 2026 growth. Strengths: marketplace expansion, AI demand. Risks: tech overhead, competition. Tau, TAO, for decentralized AI, post-halving interest. Strengths: machine learning utility. Risks: early stage, volatility. Beyond picks, think about risks. Hacks, use hardware wallets, scams, phishing, rug pulls, manipulation, whale dumps. Evaluate via white papers, teams, experience, tokenomics, supply, vesting. Future narratives: Web3 for ownership, metaverse for virtual economies, CBDCs influencing stables. Portfolio ideas: 50% blue chips, BTC ETH, 30% mid caps, SOL, XRP, 20% high risk. Rebalance quarterly, track taxes. Gains are taxable. In conclusion, 2026 looks promising with adoption and tech advances, but caution is key. Stay educated, diversify, and monitor news. Thanks for listening. What's your take on 2026 trends?